Good afternoon, everyone. My name is Lisa Thompson, and I am presenting today with my dear friend, Chad Denson, and we are talking about methods of taxation for businesses and other tax issues. Um, I've been practicing business law for 30 years. I'm licensed in Nevada, Arizona, and California. And Chad, I'm going to put you on the spot and have you introduce yourself.
All right. Well, thank you, Lisa. I have been practicing accounting publicly for 15 years, but I've been a bookkeeper since I was like 14. I got into bookkeeping for some retail shops when I was a kid. So I've been doing accounting an awfully long time. But here in I've been Southern Arizona for about 15 years.
Well, I certainly appreciate you being on a panel with me, and I will tell everyone I kind of don't like being on a panel with Chad because I learned stuff that I didn't know every single time. Um, so I'm hoping today that I can be like, I knew that. All right. So without further ado, let's get into this. And so both Chad and I agree that there's no one size fits all for businesses, and it's about educated decisions. Um, really doing it correctly the first time. Because running any type of business is super hard work. I feel like running my business is really hard work. I'm sure Chad feels the same. And you really need to have a qualified team at your back because you can't do everything. And if you try to do everything, one, you're not spending time making money for your business. And two, you're not going to do everything well because none of us can. And so it is really good to have a qualified team that will help you stay educated, but also cut through all the noise. Because Google's a great thing, but AI isn't so much. And it's like, how do you know what is true and what is not true, and what do you really need to pay attention to? So it's going to save you money in the long run. And I tell everyone that uh, when I do these kinds of talks and my area of law, I talk a lot because I did it wrong myself. I full on did not get a good accountant when I started, and I paid for that. I had 1 year where all I did was I worked so I could pay my staff and also pay Uncle Sam, which was not an awesome feeling. And I ended up having this huge tax bill, which is a complete surprise to me. And then I worked the next year to pay my tax bill. So that was no fun. So, when I talk about this stuff, it's not because I did it right, it's because I did it wrong. And I hope someone learns from that. All right, so our goals for today are whether you are already in business or you're just a budding entrepreneur, we want you to learn about the ways businesses may elect to be taxed or verify that you're on the right track, and gain a basic understanding of the various methods of taxation and verify that you are where you should be because running a business is a moving target sometimes, and you're never going to stay static. And if you are staying static, there's a problem in some portion or some aspect of your business. All right, so this seminar is for educational and informational purposes only. There is no substitute for obtaining tax or legal advice from qualified business law attorney or tax professional about your personal circumstances. And also, presentation is not an endorsement by the host. All right. So business taxes generally. Um, all businesses are governed by the state law where they are formed and operated. So, if you are formed in Arizona and you also operate in another state, you're going to be governed by those laws. All business entities are subject to taxes in the state they are formed and also where they operate. And we're mentioning this at like the top, just because I want people to think about the things that they may need to be looking at. And I find that this is one that most of my clients don't think about. They're like, I formed in Arizona. That's cool. But also, if you decide you're going to form in Delaware, you're going to be subject to Delaware. And if you're Delaware taxation, as well as if you operate in Arizona, Arizona taxation. And also, if you sell products or services on the internet, you may be subject to taxation in states you didn't even know about.
Right.
Um, and and that's a big shocker for a lot of people. Chad, do you want to weigh in on that a little bit?
This is a question or something that I get on a semi-regular basis is I have someone come into the office who has started a corporation in Nevada because they don't have income tax. And they think that because they've started that corporation in Nevada, even though they're operating in Arizona, that they don't have to pay any income tax. And that is just patently false. I disagree with your premise, as my wife would say. So, absolutely have to pay taxes in Arizona because that is where we were operating, even if we're formed in Nevada or another state without income tax.
Yeah, I get that all the time where it's like someone will come to me and say, "Hey, I want to form an LLC in Nevada." And my question is always why? And it goes back to that educated decision. And they're like, "Well, because there's no income taxes in Nevada." And my response is, "Do you live in Nevada? Because that only affects you, right? If you don't live in Nevada, it doesn't matter." But also there's if you operate in California, California sometimes imposes taxes on, folks that aren't consistently operating there. And that's kind of a trend, right? In California and Michigan.
Yeah, and there's different nexus rules depending on, if you have an employee there, the wages, or, if you have an employee who's doing remote work, it's just over $77,000, or you might have to start paying taxes in California. Also, if 25% or more of your payroll is based in California, even if you're in an Arizona corporation. And then Nexus rules typically you need to start paying attention if your sales are $100,000 or more in any state. Um, but yeah, California likes to get paid first. They kind of dictate the rules, and then the rest of us follow, as I'm sure we're all very well aware.
So it's something that you want to definitely talk to your tax professional about if you are selling goods and services in other states, even if you're not fully operating there. So all of this really comes down to the numbers. You're going to pay some tax, but the goal is to minimize your tax liability and make educated decisions about that. So, the IRS will impose a method of taxation on your business. And that may be what you want, but I don't like it when my clients are like, I don't know how I'm taxed. Like, I want my clients to be able to say, well, I'm being taxed as a partnership and understand what that means. And it's perfectly fine. I don't want anyone to think that, and I think Chad will agree with me. I don't want anyone to think that they, must make some type of election, like they have to be something. They just need to know what they are and be sure that that's the right, area for them to be in. But first, before you do any of that, you need to get what's called an employer identification number or EIN, and it has nothing to do with employees. Do you get that, Chad, where they're like, I don't have employees, so I don't need an EIN?
Yep.
Um, they're also called taxpayer identification numbers. And I always describe it to my clients as it's the social security number for your business. And from a legal perspective, if you are not using an EIN and you are using your social security number for your business, you will not have, or you likely will not have personal liability protection. So it's kind of like, what's the point? And because you want to have that separation between, you and your business. Now, if you're a sole proprietorship and you don't have any kind of business entity, then do sole proprietors get EINs, Chad? Or can
So,
they?
yeah, I prefer that sole proprietors get EIN so that they can set up a dedicated business bank account and run everything through that dedicated business bank account. Also, when I'm issuing a W-9, let's say that I have other vendors or contractors, I don't want to provide them with my social security number, right? And if I'm operating as a sole proprietor and I have to give somebody a W-9, if I don't have an EIN, then I have to give them my social security number. So having that EIN protects your personal identity if anything happens in the business. You know, it's a lot easier to fix than contacting the Social Security Administration and fixing all of the things that go along with that identity theft of you individually. So, yeah, even if you're a sole proprietor, I really like it when my clients obtain an employer identification number.
And Chad, would you tell us what a W-9 is?
A W-9 is it's really an ID request, right? So under the One Big Beautiful Bill Act, the threshold to receive a 1099 just changed from $600, where it has been traditionally for many years, to now $2,000. But anytime you are, compensating a vendor or a subcontractor past that $2,000 threshold, if you want to be able to deduct that, and really if you want to be in compliance, you have to issue a 1099. The same thing for you, unless you're an S corporation or a C corporation. If you are providing services for somebody in the, past $2,000 worth of value, then they're required to issue you a 1099. So when you're submitting a W-9 to somebody, you're telling them the name of the organization and the employee identification number under which you would like to get paid, under which you'd like to get compensated, right? So a really common mistake that I see for folks starting businesses is that they obtain an EIN, they set up the business, but they don't update their vendors or, anybody else with that W-9 so that the corporation or the LLC or the partnership or however you're organized is actually the one being compensated, which again, I'm not an attorney and I don't want to practice law without a license, but may impact the liability protection you have, but certainly can impact the tax return.
Uh, does the threshold for 1099s change for the 2025 tax year, or is it for the 2026?
I think it's 2025, but I would have to get back to you on that.
I would be excited if it was 2025 because then that's fewer 1099s I got to issue. So
It's been a little bit since I've given that presentation.
it's all
I know
good. I
that it
did not
changed.
mean to put you on
Yeah,
the spot. It's just
yeah,
something for everyone to think about at the end of the year.
absolutely.
Um,
Ask your accountant.
ask your ask your accountant. EINs may be obtained electronically at irs.gov, but here's the funny thing: they're obtained electronically, so you can get them immediately, but only if it's during business hours on the weekdays. So you can't do this on the weekend. Um, I learned that the hard way, and you can only get one a day if it's you know so, all right. So state tax ID numbers, EINs are recognized by most states. So just like with your social security number, you don't have to get one for Arizona. If you do sell products in another state, you may have to get another number or another identification or a license. So in Arizona, if you were selling product, you have to get a transactional privilege tax license. TPT is what we call sales tax. Um, but you would have to do that and make sure that you have a qualified tax professional who will do sales tax for you, because I see a lot of people that get in trouble for that. And we're going to talk a little bit about that at the end. All right. So LLCs and corporations may choose their method of taxation. So within 75 days of approval of the formation of an LLC or a corporation, it may elect its method of taxation with the IRS. So, for example, this morning, I formed an LLC. My client has, and I got the approval today. So my client has from, 75 days starting tomorrow to make an election with the IRS if they don't want the default method of taxation for their LLC. And your method of taxation may change over time as the business grows or doesn't grow. So you should have that reviewed regularly, because it's a little bit too late if you get to the time of taxes and you're like, oh, well, I should have done that a year ago. And LLCs may elect any of four methods of taxation, and corporations only have two options to choose from. So here are the methods of taxation. Um, Chad, do you want to go through these or do you want me to whip through them and then you talk about specifics?
I'm happy to go through
Okay.
them. So disregard identity um, is just like being a sole proprietor. The same thing with an LLC. You file on the Schedule C. It's a schedule of the 1040, so there's no additional income tax return to file. Partnerships for LLCs are also really similar to being an LLC or a sole proprietor because we also potentially file a Schedule C. If we are two unmarried people, we can split it 50-50 and we can file two Schedule Cs and divide everything out of there. On the two Schedule Cs, if we are exactly 50-50, right, we can avoid filing the 1065, which is the partnership return. But if we have different ownership percentages, we have to file a 1065. So only if we're 50-50 can we get away with not filing the 1065 and file the Schedule C. The S corp.
So you know, you bring up something that I didn't put later on in the presentation, so I kind of would like to highlight it. If
Sure.
you are being taxed as a partnership, you must file a partnership return. Um, and again, I learned that one the hard way.
Not if
I
you're
thought,
50-50. If you're 50-50, you can, because it's taxed so similarly, because you're still paying the same amount of money in self-employment tax and income tax, you could, if it's 50-50, you can sometimes, get away with filing two Schedule Cs on two different returns. And sometimes if we have a poorly formed partnership where we don't have an operating agreement or we don't have minutes and all of these things for people who have put together partnerships incorrectly, sometimes that's really the only way to go about it because otherwise we're going to be in a lot of trouble for filing a partnership return without any guidance.
well, so if you're an LLC and you've basically, I mean, this is the default for LLCs is being taxed as a partnership. You're going to have to file a partnership return. Is that correct?
Most of the time, yep, most of
And
the time,
those are due. I'm only talking about this right now because I didn't put that in the slides a little
yep,
bit later on. And those returns are due on March 15th.
correct.
There's another thing I learned. Um, like when I first started out,
Yep,
my not so good accountant was like, "Hey, your tax return is due." And it was like March 10th. And I was like, "What are you talking about?" I was like, April 15th. And they're like, "No, it's due in 5 days."
yep,
What? Wait. Ah,
yep.
all
And
right.
the extensions are due a month earlier as well, so they're due September 15th instead of the individuals being due October 15th.
Right.
But corporations are due April 15th and October 15th for the extension, if their calendar year.
So corporations are not March 15th, it's just LLCs.
Just that's correct.
Okay, so the slides are wrong. Um, we'll correct that when we get there.
Nice.
All right, so this is my thing that I learned from Chad today. All right, so want to tell us about S corporations?
S corporations are kind of the cream of the crop right now. They have been for a little while. C corporations are coming back a little bit, but for the most part, S corporations, when you've got your feet on the ground and you're trying to incorporate some tax efficiencies, most PLLCs and LLCs make an S election if they're making, substantial revenues. C corporations are when we get into if we want to go public, if we really want to like franchise, if we're making substantial revenues, those sorts of things, and C corps can be a really great option. Also, C corporations are like the Rolls-Royce of fringe benefits. S corporations, LLCs, they're okay. C corporations are where you can do all sorts of really interesting tax planning and fun stuff.
Right, but part of that is you need to be bigger to take to spend the money to do those types of things. 'Cause
Exactly.
if you don't have a ton of employees, it really doesn't matter if you have
Exactly.
a
All tax
robust
deductions cost
retirement.
money. Yeah.
Yeah,
All tax
exactly.
deductions cost money. So if you don't have the money to spend, You don't have the tax deductions that you're
Right.
going to be able to
So
essentially.
Chad and I were talking a little bit earlier today that, we have very few clients that choose to be taxed as a C corporation because mostly we work with small to medium-sized businesses or who are happy in that space. Um, so your C corporations are, your big companies.
Hmm.
All right. So if you're a sole proprietor or you're going to be considered a disregarded entity, a sole proprietorship is a single person or two spouses providing goods or service to the public for profit. Sole proprietorships are not a business entity. There's no formal creation requirement. You can just, like, hey, we're going to sell some cookies. And there's unlimited personal liability. So this is my little plug for there is really no reason nowadays to be a sole proprietor, to operate in that way because you have unlimited personal liability. And if something goes wrong or you have debt, you're looking at filing a personal bankruptcy. And that is completely fine if you've made an educated decision to do that. I can't tell you the number of times I've had people who have been running businesses and something goes wrong and they don't have an LLC, which are super easy to create and operate if you get some advice about how to do it. Um, and they're devastated personally. So you can also as an people are like, well, I don't want to have to file a tax return or make my taxes more complicated. Well, if you choose to be taxed as a disregarded entity, you're basically taxed as though you're a sole proprietorship. And so Chad, I'll let you take the rest of it.
Yeah.
So self-employment, tell us about that.
Yep, the self-employment tax. So again, there's no separate income tax return because you file on a Schedule C. Generally, it only makes tax sense if making less than $35,000 in profit, and I think that that's largely up to interpretation. I don't necessarily advocate making an S election until your revenues are going to be greater than that, and that's a really uncommon perspective. Because what happens when you make that jump from an S corporation is you need to have good books. You need to have excellent bookkeeping. You've got to have a payroll company, and then you need an accountant. So the cost of compliance multiplies by a factor of probably eight when you switch from a sole proprietor LLC to an S corporation. So really what you're doing is you're saving a lot of FICA tax, which is Social Security and Medicare tax. And what an accountant is doing is accountants getting paid for it, but they're robbing you of all of the contributions that you would be making to your own trust fund account, your own Social Security account. So I agree and I disagree with the numbers on this slide. But yeah, until you've got your feet on the ground, until you're doing at least $35,000 in profit, you really should, you're not worried about bookkeeping so much. You're not worried about, other corporate tax planning. You're really worried about, is this something that I want to do? Is this something that I like to do? Is this something that I want to continue to do? And you're filing on a Schedule C with no other income tax returns, and you're happy to pay that self-employment tax of 15.6% on top of the income tax at that point. You still qualify for the 20% qualified business income deduction. You still get an adjustment of one half of the self-employment tax above the line. So there's still some really cool benefits. You potentially get to take a home office deduction. You can write off mileage and auto expenses and travel. And there's a lot of people that think that um, they don't itemize. The standard deduction is too high, so they don't put together business expenses because they don't understand the difference between business expenses and itemized deductions. That's another really common misconception that I get in my office. And it's always, no, no, we're allowed to deduct all of your applicable, business deductions as long as they're reasonable and prudent. Um, Ordinary and necessary in your business and contribute to either the current or future profitability of your business. And itemized deductions are completely separate.
Is
So,
that true if you're a sole proprietor as well as being taxed as a disregarded entity, or is it just if you are an LLC and you've chosen to be taxed as a disregarded entity?
because they're taxed similarly on the Schedule C, there's really no change in the taxation. for those things. So you can still, as an individual, the section of the Schedule A where we used to be able to write off attorney's fees, investment management, CPAs, accountants, all of that, that whole section of the Schedule A is gone, the miscellaneous section. But for instance, on a Schedule C, I can write off attorney's fees or financial management fees or estate planning fees or accounting fees that are related to the business, right? So if I've got an estate plan that's going together and it has to do with how my shares of the company or what happens to the company. I know that there's no shares in Arizona, so I misspoke. But as we're planning what happens to the business in an estate plan and who the beneficiaries are, who the directors are in case the owner becomes incapacitated, those sorts of things. All of those things all of a sudden become deductible on the Schedule C where they weren't before on the Schedule A. So there are some cool things, and you do start to be able to take advantage of that dedicated home office, which is also gone. The 2106, where we used to be able to write off employee business expenses, doesn't exist anymore unless you're a recording artist or you're military, right?
So, I mean, this is the result of the big beautiful bill. Those things have changed just for the right now.
The 2017 Tax Cuts and Jobs Act
Okay.
did that, and then the One Big Beautiful Bill made them permanent because the 2017 Tax Cuts and Jobs Act was scheduled to sunset, and the OBBBA made them permanent provisions.
Okay. So I'm going to reiterate just so everybody's very clear on my position. If if you are doing something other than just selling like, um well, I think you should always be an LLC if you're going to do business, period.
I agree.
Because your personal liability is huge if you're not. And so you can still be taxed as a sole proprietor, but you have personal liability protection. So I do not support slides that say sole proprietorship, but I tell you about it. And you can see that little guy all by himself over there. Like you don't want to be that guy. All right. So partnership taxation is essentially like what we were talking about, and we kind of touched on it. Is there anything else that we should say about this, Chad? It's self-employment tax. Uh, it's the default method for LLCs if there's no election made by an LLC. If I want to be a disregarded and treat my LLC as a disregarded entity, do I have to fill out a form?
No, just the tax return.
So just my tax return and if I'm a partnership, that's the default. So I don't have to do anything for that.
Yep.
Okay.
The point that I'd like to make on partnership taxation would be general partnerships and the liability that's associated with them and how you're on the hook for your partner's decisions with just about everything. If I see someone come in who's formed as a general partnership, I won't entertain a conversation with that client. I have seen some unbelievable horror stories where one partner takes off with all of the revenue, all of the bank balances, and goes to Atlantic City, or Vegas or something, and blows it all and comes up with a huge amount of debt that the other partner is now on the hook for,
And their spouse
and
in
their
the state of Arizona,
spouse.
right?
So
So
general partnerships are an enormous red flag. I don't have any use for them. If you know someone in a general partnership, you need to tell them to contact an attorney immediately.
contact me.
Yeah, and get that
But
changed.
and so just so everyone understands, you don't do anything to form a general partnership. It could be as easy as because they're just created as a matter of law. If I say to Chad, like, hey, you know what? We should go to the state fair and sell tacos. Let's like make tacos together. We just formed a general partnership. And I'm 100% responsible for what he does when we're making the tacos. If we make some bad tacos, then we're both 100% responsible. And my husband's responsible because it's a community property state, and there's no way to limit that. If you do like being a partnership, one, you could be an LLC and you could both be part of the LLC, or you could be, you see it on the fourth. bullet point on the slide. You could be a limited partnership, a limited liability partnership, or a limited liability limited partnership. And there are reasons for doing that. They're pretty rare. Typically, they're for like CPA firms or law firms or doctors. But you can formalize a partnership, and you do so with the Arizona Secretary of State. And if you're interested in that, contact me, or contact a business law attorney that knows about it. All right, so now to the stuff that everyone wants to know about. S corporations. So to be very clear, if you are an S corporation, you are electing to be taxed under subchapter S of the Internal Revenue Service Code. And I just learned this from Tad, why do I keep calling you Tad? From Chad, is that being an S corporation or making this election is the only way you can have W-2 employees. Did I get that right?
No, it's the only way that you can have a W-2 as an owner.
Okay. So that slide is incorrect. I will fix that before I send that out to everyone. So
S-
it's the only way that I can pay myself as a W-2 employee.
Right. So a sole proprietor, an LLC, a partnership, has an EIN, hopefully, and can have employees, but it's unlawful for a sole proprietor or the owner of an LLC that hasn't made the S election to take a W-2 salary or wage. And the reason is because you're paying that self-employment tax at 15.6% already. I also have people who will want to 1099 their spouse, right? So they might have some work that's done and they want to 1099 their spouse, and it doesn't do anything. It's you end up paying self-employment tax on it. Anyway, it's a whole thing. When we get to an S corporation, we're required all of a sudden. We go from it being unlawful to having a requirement to take a salary that's reasonable and prudent. Um,
So
the
I'm a startup business.
Hmm.
When I started my law firm, I made nothing because I had no clients. And so that year was very lean. Uh, am I supposed to pay myself a reasonable salary for other attorneys or a reasonable salary for what my business is making? If
The
I'm
IRS and Congress have never really given us a lot of guidance on what a reasonable and prudent salary is. So, something that we do is we use a tool that bases decisions on what other people in the county are making in similar positions with similar experience. So we base, a salary on your number of years of experience and your competency and we call it the many hats approach. So all of the different jobs. So if Lisa Thompson is an attorney, but she also does her bookkeeping and she also does her marketing and she does her filing and she's the office manager and receptionist and potentially the custodian and on and on and on. We're going to try and figure out how to compensate Lisa for each one of those positions that she holds within her company based on the wage and competency of each one of those positions and how many hours she spends doing those on a 40-hour work week. No more,
well,
even though I
and
know
Well,
that
but
you're working.
that's also if I'm making money, because I most certainly, as the owner of the company, need to pay myself a reasonable salary, but I can't pay myself, what others in my stead are doing if I'm not bringing in any money. That's
Absolutely.
correct. So
So
it's
we do
just
want to set
I can't have this huge income and say I paid myself $5.
Right. We do want to set a baseline for what that salary should be as something to shoot for and hit as a minimum when we're making money. But for instance, I work with another attorney who does a lot of stuff with government contracts. The government's been shut down for 6 weeks, right? This attorney has no revenue coming in of any kind. He can't afford to pay himself right now, right? He's got to make sure that his team members are paid. He's got to make sure that the mortgages and lights stay on. He can't afford to take a salary right now. And that's okay. If there's circumstances that, drop your revenue and you can't afford that, or if you're just starting out, you might be set at a $85,000 reasonable salary, but if you only made $20,000 in revenue, it might actually only be 10 because we still have to keep the lights on. Government's not trying to put you out of business, but they're trying to stop people from not paying any self-employment tax because we got to keep Social Security and Medicare, those programs alive.
So, you know, I Currently, I am a corporation. I'm a PC, which is a professional corporation, which is just a corporation. Um, and the reason why I'm a corporation, even though I'm one person, is because when I formed, there was no ability to choose as an LLC to choose how I wanted to be taxed. And I wanted to be taxed. I wanted to be able to pay myself and contribute to uh FICA and, my trust account with the government. Uh, so I had to be a corporation and I had to elect to be an S corp that way. And now, if I was going to do it, I would definitely be an LLC all day long or a PLLC, which just is a professional limited liability company. And so like profits and losses are going to flow through to the members of the LLC. And Chad, I will let you talk about that. Um, what does that mean when I say it flows through to the members who are the owners of the LLC?
Yep. So flow through entities is what they're called. Partnerships, S corporations don't pay their own taxes, and really neither does an LLC, right? Everything shows up if it's an LLC or a sole proprietorship. It's a schedule it's the Schedule C on the 1040. So you pay your taxes. You might make estimated quarterly tax payments, but you pay your taxes on April 15th with every other individual. The same thing with S corporations and partnerships is all of the profit is reported on that tax return, and then it comes out on a Schedule K1. It's kind of like a W-2 from an S corporation, although you do get an S corporation W-2. But it's like your share of the income and profits, and it flows through to Schedule E, page 2 of the 1040, where it gets reported. And then again, you pay all of your taxes on the 1040 by April 15th, just like everybody else. So the S corporation and partnership don't pay taxes. It all flows through to the individual. And again, that's how you take advantage of the 20% miscellaneous deduction that we call the qualified business income deduction.
So let me give an example. So I'm taxed as an S corporation. I am also paid as an employee of my firm, right? So I get a W-2 from my firm for the money I make, my reasonable salary. And then my corporation files a tax return and it says this was all the income and these were all the losses or, all the expenses. And that's an actual return. But my corporation does not pay any tax. Right, itself. It's not like, oh, Thompson Law Group owes money or any of that. It's just I file the return and then,
Except the payroll tax, because when you're taking a salary and you have employees, you pay that payroll tax,
but I
but
don't do
no
that on
income
my,
tax.
yeah, so I'm talking about income tax.
Yeah,
All right, you for sure pay payroll tax, but
yeah,
that's something else and that's not annually,
right.
right? Um, so I pay no income tax, but I file the return, and as part of that return, I get a K1, and there's only one K1 for my corporation because there's only one owner and it gives the same, it's like here's what the business made and here are the expenses. And so it lists it out. If I had someone else as part of my corporation or I had three people, then each one would get a K1 with their percentage of the business. So if the business made $100,000 and you had someone that has 35% and you have someone that has 30% and you have another person that has 35%, then the K1 would say 35% of the profits and losses, 30% of the profits and losses, and then 35% of the profits and losses. And then
Correct.
that goes on those owners' individual returns.
Correct.
And then there would be the W-2 income as well.
Correct.
Okay. And if you are an S corp, and this is a really big deal, my clients step into this all the time. I'm sure you see it, is if you're going to give a distribution of money from your LLC to one owner, you must do the same to all the others based on their percent ownership.
Correct.
You cannot just be like, you could give bonuses. And that's cool. Like if I like someone, another owner of my company, I can give them a bonus, but they're going to pay employment tax on that, right?
Mhm.
or withholding tax on that, and that's okay. But if you are just straight up giving a distribution, then it has to be done with each owner. You can't choose.
Correct.
All right. I got this from your slides that you gave me. You said it earlier that S corp elections are best for businesses that have a profit of 250,000 or more, or when there are employees.
Yep.
And I think I repeated myself on profits and losses flow through. So we're just gonna say that again. And then the business entity must file its own tax return. But did you say, but that's March 15th, yes?
Yep. S corporations are due on March 15th, and if we file an extension, September 15th.
All right. So C corporations, and we're not going to talk that much about that, about C corporations, but they, if you see the term C corporation, it means they're taxed under subchapter C of the Internal Revenue Service Code. They're generally large corporations. I had heard, so this number is mine. I had heard that the general rule was like over 500,000 in profits annually. Would you say that that's correct, Chad? Or
It,
even
you
more?
know, it really depends on every situation. If I've got 10 shareholders, then no, not necessarily. But if I have a single shareholder, then yes, absolutely.
Okay. Well, and the corporation itself pays income taxes and it files its own tax return on March 15th of each year. So if I was being taxed as a C corporation, I would file my Thompson Law Group tax return, and then Thompson Law Group would be assessed however much in taxes that I needed to pay. So I hear all the time, and I'm sure other people do that are on this presentation, well, C corporations are double taxed. What does that mean, Chad?
So with a double taxation, we pay Arizona's got a flat rate of 4.2%, and the federal rate is 21% currently. And you don't get the qualified business income deduction, the 20% that LLCs, sole proprietors, partnerships, and S corporations receive. You lose that benefit. You're still required to take a reasonable and prudent salary. Um, but then if you're an S corporation, when I take a distribution, or when I'm an LLC, when I take an owner's draw, I don't pay tax when I take that distribution. It's a reduction of equity. It's actually a balance sheet item. So the amount of money that you pull out of the corporation doesn't change your tax liability. When you're a C corporation and you take money out of the corporation that isn't related to your salary, you pay taxes at dividend rates because you're taking a dividend. And it's either 0, 15, or 20% depending on your bracket. So there isn't a great you can't really pull money out of a C corporation tax free like a distribution like you can in these other entity structure types.
Okay.
Was that clear as mud?
It just reminds me that I need to have a really good qualified tax professional to explain this stuff to me,
Yep.
right? Because it's complicated. And like I was saying to everyone, like if you're like, wow, I don't understand, yeah, welcome to the tax world. And then
There,
just when I feel like I have a handle on it, then they change it,
yep,
you know. All
yep.
right.
There was a question real quick, Lisa, in the
Yeah.
chat, and it says, if you're a member of an S corporation, does a bonus you receive count as a distribution? So a bonus typically is run through payroll and it's additional salary or wage. And
Hmm.
it's subject to Social Security, Medicare. You might also get retirement contributions off of it. If you've got employer match, it might also be, calculated off of that. Distributions as a shareholder are typically not a bonus because bonuses are, again, run through salary. But if you're receiving that as a distribution, then the other shareholders also have to receive a similar distribution. So it's not really a bonus for you. It's actually a distribution of profits to all the shareholders, if that makes sense.
Right. So you can't if you are an 100% owner, then you're good. You can give yourself a distribution, but that's going to lower the equity in your company. Correct? Did I say that right, Todd?
Yes.
It's going to
Yes.
lower your capital account.
Yes.
And but if you have another owner and you gave yourself 5,000 and you have another 50% owner of your business and you're being taxed as an S corporation, then you got to give the other owner the exact same amount, right? Those are the rules. And also with S corporations, I just had an issue that my clients and I are still working through is as corporations, you can't have different shares of stock. So you can't have different voting classes. And that sometimes presents issues. And so we're trying to balance like how badly my client really wants to have two different classes of stock versus the tax benefits of being an S corporation.
Right.
So, um, all right. And I'm going to skip this for right now. I want to talk about this. I should have put this higher up. So, from a legal perspective, I cannot tell you the number of times that someone comes in to my office and they're like, we look up what they are and they're like, I'm an S corp. Okay. If you are an LLC, you remain an LLC. You are electing to be taxed as an S corporation. Just because you will elect to be taxed as an S corporation or even a C corporation, you do not become a corporation. You are choosing a method of taxation. You remain an LLC, right? Um, there's no, um, restrictions on how that LLC or corporation is structured, or there may be, like we said, dividend, profit and loss allocation sometimes, and also, distributions. But the ACC does not care how an LLC or corporation is taxed, and I only care if you want two shares, two classes of stock, and I'm writing your bylaws or your operating agreement. That's when I care. But I will say like, oh, so you're an LLC, and they'll be like, no, I'm an S corp. Chad, do you get that too?
I do.
The so you are making an election, right? So Thompson Law Group is a corporation is a corporation, whether I choose to be taxed as an S corp or a C corp. And just because we're doing a business law series, I want to also point out, because a lot of people get confused on this. I get some of my real estate agent clients are like, no, I'm a PLLC. I'm not an LC, an LLC. Um, Professional limited liability companies are just an LLC that can only be owned by licensed professionals. So if you are a PLLC, which can also be called a PLC, it can only be owned by licensed professionals. So if you are attorneys, only attorneys may own that LLC. If you're a professional corporation like I am, PCs, I still remain a corporation. I'm just all the laws about corporations apply to me. And if I want to be an taxed as an S corp or a C corp, I'm still a corporation. The ACC doesn't care. And the only thing it means is only attorneys, because I'm a law firm, may own my corporation. So
Which is a side note, if you go back one slide, should be noted when you're doing your estate planning. If your kids don't have, if your beneficiaries don't have the same credentials and someone is managing your business, right? If you've got a CEO that stepped in and is managing your business and you've created an investor model business, this is a problem. You need to talk to an attorney to reorganize in your estate plan so that it can continue to operate.
yeah, and there are ways around it. Most specifically, like I own my business in trust or my corporation in trust. So I've been able to put language within my trust to deal with that because my husband is not an attorney. And so he could not, he's my heir, and so he could not own my business. And so it would be left with no ownership versus I own it as a trust. I can address that within my trust document. So definitely talk to a qualified business attorney. Um, we have about 5 minutes left. So we were going to talk about commingling of funds. Like, don't do that. I would rather talk about some of our kind of, um, you know, f- our war stories to kind of illustrate, some of the things that we've seen. Um, you definitely always want to check for tax ramifications on anything you do for your business, you know, buying or selling. If you are going to, take out a loan, you want to look at the tax ramifications of the different things that you do with a qualified tax professional. Please don't get your cousin's hairdresser's boyfriend's friend. You want someone that has actually worked with small business. If you say to them, like, hey, when does the 1099 threshold change? Is it 2025 or 2026? And they look at you and they have no idea what you're talking about. You need to find another qualified tax professional because that is just a tax person. Same thing with the legal ramifications for any tax strategy. You do want to check with your business law attorney. Um, because everything matters, and you don't want to go to a business law attorney and have them say like you did what, and or you don't want to go to Chad and have him say you did what.
The answer
um,
is always it depends. Always.
yeah, well, that's our answer too.
Yep.
So we wanted to talk about, a lot of times people come to these seminars and they're like, yeah, no, that's great, but this doesn't really apply to me. Everything's cool. I'm doing it okay. I figured it out. I Googled it and I know what I'm doing. Chad, what are some of your uh-oh stories that you've heard?
I've got one that I'm still working on right now, and I have a client who was a partnership. They beat into us in business school and in continuing education that S corp owners all have to be American citizens, and that was changed in about 2018, where residents can actually be chair S corp shareholders. So we had an S corporation, or we had a partnership that wanted to make the S election for tax benefits and never updated their operating agreement. And one of the things that you'll find out about any partnership or any S corporation is there's always going to be problems, right? Whether they're now or down the line, there will be an issue at some point when someone wants to retire or someone wants to be bought out for other reasons or they want to go walkabout. If you remember Paul Hogan, um, there's always going to be issues. And these folks, even though they were advised several times, never updated their operating agreement. And one partner started stealing all of the money essentially from the checking account, and there was absolutely nothing that the other partner could do about it. So they've been going through this, um, and it's just been absolutely awful to watch because they both believe that they're correct. Neither one of them believes that they're wrong in any way, shape, or form. As you know, a non-biased third party, they're both in the wrong, but there's no governing document. It wasn't set up correctly. The S election was made, and they're just kind of floating along right now in disaster and despair. Um, so
So can foreigners own or be
re
part of an S corporation?
residents can, as of 2018.
So if if you have status of the United States, you can be an S corporation,
Yeah,
a member or a shareholder in an S corporation.
and it hasn't been broadcast. No one is teaching it. It's not being talked about. It's a really huge change.
It is a
Uh,
change because I almost put that in the slide because I didn't
yeah,
know that.
yeah,
Because before it was like if you are not a U.S. citizen, S election is not available, and so I had a lot of my
absolutely.
clients that had to be taxed in an unfavorable way because they had, someone who did not have status.
Yeah.
Um, so I have one that I want to mention. Again, it's kind of about operating agreements, but I had a client who 96% ownership of a business, an LLC, and there was a 4% owner, and they were member managed, which means the members can do the management of it. And the 96% owner got a trust, never transferred his ownership to the trust, and then went on vacation and died. And now the 4% owner has decided that he would like to run the business. And now, the widow of the 96% owner is kind of at his mercy, because she doesn't have any authority, to do any of it. And it's a, you know, oops. One other thing I want to mention, what if you didn't make your S election prior to the end of the year? What do you do?
So
Or what if
there is
you
a
didn't follow? I mean, like, what if you made an S election and you didn't pay yourself any salary?
yeah, that's a big no-no, and we want to try and take a salary. There's a bunch of questions there. You can make a late election if it's after the 75 days. There's a specific revenue procedure that you've got to mark, citing the late election at the top of the 2553 when that late S election is made. I'm seeing a lot more of them being made incorrectly, where people aren't citing the Rev Proc or reasonable cause for citing the late
Rev
election.
proc is revenue procedure.
Yes, sorry for my accountant speak.
It's
And then
okay.
but we still have to take a reasonable and prudent salary. So if we're making a late election, we still have to figure out how to get that reasonable and prudent salary in, whether it's October, November, December. We might have to take a substantial salary. So it's not always advisable if we can't follow the rules. But we've got to do the best that we possibly can to behave as an S corporation.
So if you behaved as one, but
Mhm.
you didn't actually put in the S election, you're probably okay.
Yeah, we'll have to do a retroactive S election. I've had a couple of clients for whatever reason that have been new clients that told me that they were S corporations. They had filed S corporations previously to coming to this accounting firm, and I received notices for a couple of them that we've been filing S corp returns for 6 years and they never made the S election. So we went and we made an S election retroactive to 2018 so that the Internal Revenue Service would accept all of those tax returns because they were behaving like an S corporation. The returns were filed timely, the payroll had been taken, distributions were equal and even, and all of those different things. So because they were behaving like that, the IRS accepted it.
So we thank you for attending and we look forward to seeing you next week.